Welcome to our first event of the Executive Roundtable for Materials Growth. It's our first event of the 2025 season. I'm Kendall Justiniano, the host for today's event, and I'm the Managing Director of Growth Arc Advisors. We're glad you could join us for today's event. We've got a really great discussion planned for you. The Executive Roundtable is a network of executives from the materials industries who are focused on growth and how to achieve it. Our mission is to provide a forum to discuss issues and approaches vital to a thriving materials industry. We're going to have roughly 40 minutes of interview and the rest for discussion and questions. If you're here, it means you have executive level membership. So that means that we'll follow up by sending you links to a video replay as well as an executive summary, as well as any of the slides we showed today. So without further ado, if you have your view set to speaker mode, you should see today's guest, Paul Strzelec, and myself on your screens. Paul is the CEO of the Strzelec Group and has over 30 years of global experience helping companies across a broad array of industries deploy growth-oriented, cross-functional planning capabilities and disciplines. Paul has held various senior leadership roles within companies that pioneered advancements in integrated business planning, supply chain management, and network-centric technologies. That includes Manugistics, which is now Blue Yonder, and VeriSign. And over the course of his career, he's extended that expertise to organizational and process competencies in SAP Integrated Business Planning, also known as IBP, and Kinaxis. Paul has helped some of the world's most respected companies implement business models and demand-driven strategies. Wow, Paul, that's a serious list. Church & Dwight, CVS, Darden, Dell, DuPont, Ford, GE, Ingevity, Microsoft, McCormick, Mosaic, Nalco, Department of Defense, Utz, Wegmans, W.R. Grace. The list goes on and on. Paul holds a bachelor's in business logistics from Penn State, and he was selected to be the first external director of the S&OP benchmarking consortium there. He's also taught more than 500 professionals through the university's executive education program. So I met Paul while working at one of the clients I just listed, in fact, and I found him to be that unique combination of results focused and at the same time being principle driven. Paul, maybe that's why you've fixed more broken out of the box demand planning implementations than other firms have demand planning implementations to their name. So I'm looking forward to the conversation. Welcome, Paul Strzelec.
Thanks, Kendall. It's great to be with you today.
So let's kick off. Can you give us a sense of sort of your career trajectory? Sort of what's your career arc? How'd you get started and where have you landed recently?
So I started off actually as, with a business logistics, now called Supply Chain Information Systems degree from Penn State University. Started off as a master production scheduler at Johnson & Johnson Consumer Products, working on some of the more difficult growth-oriented businesses back in the day, 30 plus years ago. So warehouse club business that was, the Costco's and BJ's and Sam's Clubs of the world that were new to the market and growing rapidly. A lot of work cross-functionally, managing promotional products across many different retail requirements, packaging various things together using external network of manufacturing capability. So through that experience, it sort of taught me a few things: how to connect information through systems and work cross-functionally with different teams. And that was sort of where I started. And then my goal from there was to continue to drive innovative practices, both on the technology front, but applying the technology to the decision-making process. And that's where I grew through Manugistics, VeriSign on a very global signaling network, and in my own efforts here.
So you spent a long time across multiple industries, but primarily, as I understand it, then focused all on this cross-functional decision-making, cross-functional planning functionality. What are some of the key themes and insights that you've centered on over your time in that space?
Yeah, I think first and foremost, companies that I work with, they believe that planning, excellence in planning creates better performance from an execution perspective.
Mhm.
And that's a mindset that begins the thought process of getting to be growth oriented. If you if you have a mindset of you can execute your way to growth, oftentimes what you'll find is brute force efforts, a lot of friction, a lot of headwinds and challenges along the way. So having that forward-looking mindset is critical, and it starts with leadership. So and so let's talk about leadership just for a second, Kendall, as
Yeah.
I think about that theme as well. So I mentioned integrated decision-making process. Well, what does that mean? It means it's cross-functional, right? It's cross-functional touching finance, it's cross-functional touching commercial teams, marketing, product management, business management, sales teams, and it touches all aspects of operations that connect distribution and manufacturing and suppliers. So the challenge from a leadership perspective is there's not a lot of great cross-functional leadership out there in the market today, right? A lot of people have
Mhm.
grown into their leadership role in a very functionally siloed manner. So for those great leaders that are out there, I've often found that they've rotated and really experienced the different aspects of the business to connect the dots as I described. That's one key theme. I'd say the other key theme is there's a lot of people that are focused on the here and now, looking at the
Mhm.
immediate result. And effective planning means you're taking care of the entire horizon. So you're not only focused on the short term, but also that trajectory of growth and opportunity that spans medium and long-term horizon as well.
Gotcha. Okay. I mean, it's interesting that you say that that cross functionality isn't necessarily always prevalent. It seems like there's a lot of that's a common term that's bandied about. I mean, as it regards sort of the big trends that you see today, what do you see the industry still wrestling with?
Yeah, I think the challenge is if you don't plan for growth, then oftentimes, I think we've had this conversation many times, Kendall. The mindset is sort of we'll figure it out when we get there, right?
Yeah.
And when you do that, that means you're very reactive, and in being reactive, it becomes difficult to make sure that you can fulfill on the expectations that you're pursuing in the market with customers as you take on new customer opportunities. So then, and that becomes very dangerous in itself because then your commercial teams start to hesitate around pursuing opportunities because they're not sure that you can actually satisfy the expectations. And again, so cross-functional brings that back together. Forward-looking across the horizon brings that back together.
Yeah. Okay. Um, let's unpack this a little bit. Um, tell me sort of what makes growth the real challenge here. Is planning something that's more necessary for growth, less necessary for growth? What is it about managing growth specifically that becomes challenging for companies?
Yeah, I think first in that is, many people have said over the years, you can't cost cut your way to growth. There's a lot of functions within the organization that are built on efficiency and think about efficiency first and cost
Yeah.
reductions, limiting resources. And that can be really challenging as you're pursuing the unknown of delivering above and beyond GDP in every market you operate in, or whatever the CEO's theme is
Yep.
for growth. So in that, the other challenge is again there are a lot of unknowns. You're going to try new things you've never tried before, so you have to be prepared for a range of outcomes, meaning that you could hit the upside of what you're pursuing, or it may fall short. And in that, you've got to be able to respond and reshape your plans quickly. And that requires a speed of decision making that a lot of companies are still striving to achieve.
So that's interesting to me. So there's a level of uncertainty now that you're essentially applying planning against. What um what I've commonly heard, especially when growth targets are aspirations for folks, right? Is, well, that's not something you can plan for. We will figure that. We'll have to respond to the what we find, and we'll sort of figure that out as we go along. Which seems counter to the idea that you can plan for growth. How do you think about that?
Yeah, I think I can share some details as we develop this conversation. But I think markets are extremely dynamic. I find them to be more fragmented and dynamic than they used to be. Part of that's
Hmm.
because we're trying to get to very specialized kind of mass customization of solutions for customers. And there's a lot of competition. And the world seems smaller these days than it did 30 years ago in terms of the ability to reach markets. So all of that said, what I've seen across companies is a significant increase in variability across their portfolio. And that's just a kind of mathematical view of a data-driven view of essentially how the demand materializes. It's not coming in that very ratable routine basis that people used to experience, maybe when life was easier. Okay. So with that, you've got to figure out, how do I live with that complexity? How do I take on that variability and shape my capabilities to address that?
So you talked a little bit about as well, sort of the thinking from near term to sort of long term perspective. How does dealing with that time component, what does that cause for sort of your planning capability and your planning mindset?
Yeah. I think time is the most difficult dimension. So when I think of a portfolio, it's made up of products or offerings, products and services, offerings
Yeah.
in the market. It's made up of customers and market segments. It's made up of geographies across the globe. It's made up of time, right? And time across a horizon, short, medium, long. Time meaning the granularity of how you think about your business. Do you look at it once a year? Do you look at it and reflect on the dynamics once a quarter, once a month, once a week, daily, intraday, right? Time is very difficult because how you approach it and the frequency of being able to turn the clock to understand how the world's changing around you sets the stage for how responsive you can be.
Okay. When I think about planning, and we'll get into a little bit of the details, I think of you've got customer data coming in from the market. You've got operational awareness data coming in from your operations. You have complexities like mix and scheduling, if you will. What are sort of the challenges and the big tensions that you see that are part of a good mindset around sort of planning?
Yeah, well, thanks for sharing that perspective, Kendall. I had to start to get my mind around it to be able to pivot through the many different perspectives that you just stated, right? So that's difficult. A lot of people are kind of programmed to think one way or to look at the world through a single lens, but
Hmm.
everything you said requires you to be able to pivot through that and also have some focus. So what you're sharing now on the view here is, and the words are very purposeful here, is driving towards, a lot of companies have talked about becoming more customer centric in their pursuit of growth, getting closer to their customers. Well, which customers do you want to get close to? Some would say those who value you most, but some that value you most don't always treat you how you should be treated. So it really needs to be that connection between customers you value most, who value you most. If you can find that sweet spot, then you have a strategic purpose on serving each other and you can grow together. Okay. You start kind of at the top of the cycle here with number one, thinking about who that valued customer is and creating a portfolio of offerings that is productive in servicing their needs. And if they value you, they pay you for it, right? But they're only going to pay for it if you can meet their expectations. So being able to build a business model, an operating model around that to deliver responsiveness when the customer wants it, where they want it. So that becomes, as you mentioned, kind of that consumption-oriented perspective of getting closer to the customer and working your
Yep.
way back from there. If you don't understand how they're using your offerings, then it's difficult to be prepared to service their requests, right? So that understanding of their lead time requirements and positioning your capabilities to service that is critical. Um, Third on this list is in quantities that make sense. What does that mean? You, especially in bulk chemical distribution or specialty chemicals,
Mhm.
there are not everything is treated equally, essentially. There are things that behave in more discrete manners, there's things that behave in more process-oriented manner, right? And
Mhm.
how you run your plants and how you distribute those products needs to be efficient, but at the same time, balanced with that service and responsiveness. So you have to think through your business policies and operating policies around these kind of components or parameters of your business. Um, According to expectations, on time, in full, right first time. These are elements of measurement that you're living up to your promises, right? And then
Yeah.
a moment of reflection, and in the fifth point here, which is portfolios are dynamic, just like the market are dynamic. You have things that come, you have things that you thought were going to be great. They reach maturity, they start to fall off. Your customers trade them out or reformulate to other things. So you have to be prepared to recycle that portfolio and maintain its rational. Otherwise, what you'll have is a bunch of distractions that dilute your overall purpose of serving those that value most. So when I think of customer centricity and kind of packing that up in one viewpoint, it's connecting all of those dots, if you will.
Yeah. That's interesting because, I've heard customer centricity sort of positioned as satisfying the customer's every need. And so that's the gold standard. What's interesting here is this is customer centricity, but you sort of reflected some of the tensions, right? I
Yeah.
can't operational satisfy any need the customer might have, but I want to be able to set expectations appropriately with the customer, and I want to be able to deliver them to them in a way that adds value to them. And then at the same time, you have this tension around, well, I want a certain mix within my operation. I want to be able to do it with a way in which makes operationally sense, like minimum order quantities. Is this where that cross-functional tension or that cross-functional importance to your decision making uh, becomes critical? It seems like I feel a lot of tension in this slide from different perspectives and different viewpoints.
Exactly. And one that you didn't mention there that's critical is the financial perspective of this, right? These are investments. Some investments require some patience. Some you should expect more immediate results. You shouldn't have sort of equal opportunity entitlement to inventory to service every single customer with every single need. So it's kind of a disproportionate allocation of inventory and working capital is critical. Those are payment terms with suppliers that you depend on, shrinking or extending them to the point that the supplier doesn't want to do business with you anymore,
Mhm.
will lead you to other inefficiencies within your business. So you have to, again, think about the commercial pursuit, your own operational landscape, but also the financial room to maneuver surrounding all of this.
Can you make this real for us in the sense of do you have an example? Maybe it's a negative case study or a positive story of sort of balancing these different tensions within supply and demand, or how it wasn't balanced well?
Yeah, absolutely. So I think in kind of a real world example, um, there's a lot of attention around kind of thinking through one size fits all. And again, the mindset, I understand the mindset, especially at senior executive level, is keeping things simple. Simple sounds great, right? Simple sounds easier to execute. But at the same time, the same leadership has created a diversified portfolio of offerings, right? They have commodity products, they have specialty
Mhm.
products.
Mhm.
They treat their specialty products at times as if they're commodities, right? In some cases, they try to over deliver on value for commodity products, but they're not that special, right? So
Yeah.
that element of one size fits all and just framing out your vision and the way you intend to operate to deliver on growth can be very difficult.
Well, I've certainly worked in companies where one size fits all seems to have been kind of the mentality, right? Or if you're trying to do an implementation where you're trying to get a planning system out into the company and you've got multiple divisions across which you're implementing that, it can often feel like this is the system we have to use and this is how we have to use it. Or when I have guidelines pressed on me, like you mentioned financial, right? I can't tell you the number of times when I've had a finance guy show up in every business and say your inventory levels have to be at this percentage. No exceptions, right? Is that the fundamental challenge you see?
Yeah, I think it starts there, and then it's getting into the details. Devil's always in the details, right? Of what does that mix look like of products, customers, geography across time, and then come up with the right planning approach. So how do I approach demand planning? Am I reliant on sales input to get the signals that I need? Are those
Yeah.
signals equally present, short term, medium term, long term? Or does the sales team really only understand what the customer is going to do immediately next, right? Do I have the capabilities to look at it of kind of repeatable patterns that have happened in the past using statistical forecasting as an example? Why would I apply statistical forecasting to products that sell once every 5 years, once every 3 years, once a year, but you're never sure which month it's going to come in? The math's not going to figure that out, right? So the challenge is finding the right techniques and approaches so that you're sharing that signal backward planning from the customer through your distribution and manufacturing. And on the other side of it, the tension you're asking about is, your supply side has to have a strategy that recognizes, how forecastable and variable your business is. So not everything can be precise in an expectation. So you have to be able to service the expectation around a range of outcomes, a range of expectations. And most companies are excited to get one plan out the door once a month, once a quarter, whatever it might be, let alone having scenarios with a range of expectations, right? They handle that abstractly kind of around buffering and Wall Street expectations from a
Yeah.
finance perspective, but have not necessarily operationalized that in the way they run their business.
So how do I think about this as an executive, right? Especially if I'm trying to upgrade my level of capability, let's say in the planning area. I'm trying to lead the organization into a new way of being. And what I hear you saying is, oh, but one size doesn't fit all. How do I manage that in terms of an organizational implementation, or how do I have those things be able to coexist effectively when I'm trying to make that kind of change?
Yeah, I think the first is one, describe the characteristics of the business, of the portfolio, and each of the segments of your business that you are operating, right? And those may not look the same, right?
Yeah,
And then again, cross-functionally, and here's an example of it. Some parts of your business are more valuable than others. Some parts of your business are less complex than others. What do I mean by complexity? So I talked about market dynamics and variability. So on the right side of this view, you have a pattern of business that's generally stable over multiple years,
hmm,
with some variability and some recent dynamics here as it fell off for some reason in the last month. But generally
hmm,
speaking, more stable, less complex to land on, what demand you would expect during a period. And if you look at the scale of that business and value, it's operating in the 25,000 range per week. That's a significant value of what's being delivered in this particular example. Compare that to the pattern below, especially in the middle of the pattern when you have extreme spikes that follow by valleys, extreme spikes that follow by valleys, and no consistency of that pattern over time, recent decline that's taking place. That's more complex, right? So if you stacked up all of your products, all of your customers, all of your geographies, and evaluated the mix in terms of the complexity that's introduced against the value, then you can start to shape a strategy of how to go attack it. Attack it from a planning perspective, organizing around execution, and aligning your organization to those principles.
and so if I hear you right, you've got to be willing to allow each part of your business or each segment within your business some leeway in deciding sort of how you're going to plan for that business and ultimately service that business. Is that
Right.
right?
It's a segmented approach. Exactly. It's a segmented approach. And that's very different than, I'm going to say, Kendall, I'm not promoting wild, wild west, right? People get to decide when
Yeah.
they want to forecast, when they want to call in a customer, how much inventory they want to have, how they want to run their plants, without any guidance or kind of the principles around the techniques that should be used and the approaches. And that's where leadership needs to come in, connecting that end to end to
Yeah.
service the expectations in each of these segments.
So when you've implemented or fixed implementations, do you is it that you do a characterization business by business or segment by segment? And then how do you then think about sort of how does that lay down in the actual sort of operating process of each group?
Right. So very hands-on. Yes, looking at the characteristics of the business, analyzing this type of data to describe the operating patterns of the business. And then from there, make sure that we have acknowledgement and buy-in and recognition. I've had times when I've been told our business is seasonal. You look at the pattern, it's stable all throughout the year, every month of the year, right? I've been told we have seasonality, it only occurs 2 periods in the year, and yet there's three clear, distinct periods when you sell more than any other period in the year. So once you share in a very example-based approach,
Yeah.
real products, real customers, real geographies, and contrast them in that way, you get buy-in. And from there, then you have to demonstrate how the techniques that are being used deliver more proactive behaviors than reactive behaviors and results. And when you do that, again, it creates the recognition and the muscle memory and and experience around it. And then we start to work on making that part of your DNA. And that's when, again, leadership steps in to reinforce the concepts, the success, and build the competencies of their teams around that cross-functionally to sustain that, to continue it, and make it part of your practice.
Okay. So characterize, get alignment on what you have and how you're going to operate it as a result, how you're going to do planning for this segment or this business as a result, and then implement from there.
That's
Is that a
correct.
good description? Excellent.
That's
I mean,
correct.
it strikes me as it strikes me as pretty rational, but it strikes me as first principles, right? You kind of understand what you have in place, and then based on that, the operating philosophy flows from that, if you will.
Yeah, and I think around it, what I've seen repeatedly is a lack of some of the service providers and partners that you choose to help you with this transformation. They don't really immerse themselves in your business or get close enough to your business to really give you pointed advice. And as you mentioned, I've had the good fortune of working with a lot of different companies across a lot of different industries. And I remember Wegmans, for example, a fantastic grocery retailer. If you've ever had the Wegmans experience,
I
when
have.
when when I first worked with Wegmans, they said, have you worked in retail? Yes. Have you worked in grocery? Yes. Have you worked with Wegmans? No. So their difference is, and you can feel it in the experience that they deliver to their customers every day, is not equal to every grocer, not equal to every retailer. So you've got to be very careful with people that are just, quoting the status quo and dropping the best practice joy on you, where you think you're just like everybody else, but at the same time, you're trying to be different. You're trying to be grow you're trying to grow. So you want to make sure you recognize the uniqueness of your company, strive for getting that balance of simplicity, but
Yes.
also the value creation that you've laid out and the diversity. And then build from there and apply the right techniques. Not every technique works the same for every company.
That tells me that your company strategy and your approach, or even your business unit strategy, has got to be part of that characterization. Where do you want to land on that operating curve, if you will?
Exactly. Exactly. So
No, it's
we
go
mentioned a
ahead.
lot of the technical aspect in my background. I've always been very data driven in the sense of believing that, we're moving from a lot of analog practices to digital practices, and meaning information at my fingertips all the time. So I have insight driven approaches. I'm not subjective or opinion based all the
Yeah.
time.
Yeah.
So there's a huge technology component, but the successful companies that leverage technology are the ones that apply it to the situation of that business and what they're encountering. It's not a one size fits all. It is a great question. The there are customers that are strategic and there are customers that are transactional. And as you're describing the cultural or behavioral aspects, there's those companies that like to play well with each other and those that don't, right? So laying out I would say lay out what good looks like and build examples of customers that behave to that ideal. So who is your ideal customer? What products do they buy from you? How do they treat you? How do they order? How do they respect your policies? Lay those aspects out so you hang out the anchor point of what good looks like, and then measure everyone else against that ideal and shepherd your commercial team through that process. Because they a lot of commercial teams, they're they're programmed, if you will, to they're assigned a territory, they're assigned targets. They have to believe that in something more optimistic than maybe what you're experiencing. So you need to facilitate that discussion to profile it correctly. And it's also dynamic, right? So I did a lot of work on with the commercial teams on call reports and things like that, and how they approach sales calls and the information that we're capturing. In the chemical industry, what I've seen is a lot of technical assessment, like the performance of the chemicals in the customer's application, end use application of those chemicals, but not enough about the relationship, the treatment, the commercial terms, the ordering, all those things that really affect that relationship on the ground. And again, often controlled through a single sourcing person or buyer versus what traditionally was, and not chemical industry hasn't always practiced this. So I like to leverage some perspective from other industries. But there was a famous view called the bow tie versus the diamond, right? Or the butterfly versus the diamond, which
Hmm.
is if you think organizationally of how I connect my organization. Is it buyer to seller, one single point, like a bow tie, or is it cross-functional alignment even with my customers? So some of my fortunate early work that I did with Nabisco and Wegmans and Walmart and Warner Lambert back in the day was around collaborative practices between companies. And what
Hmm.
I enjoyed was getting in the room with these companies. And I made the comment about cross-functional earlier. I went in thinking, wow, this is going to be fantastic. I'm introducing the commercial person to the merchandiser on the other side of the table, and I'm introducing the supply chain person to the supply chain person. The companies were introducing themselves to each other they'd never met before in their own company. So it you got to get the house in order and then take it to the extended network.
Yeah, I was going to ask that too. How do you think about sort of either modifying customer behavior if it isn't the ideal behavior that you want, and sort of increasing that zone of awareness around the customer? Is it a lot of additional contact points within the customer, and or are there other tactics there?
It's additional contact points, and a lot of the work that went into even industry standards that were built around this with some incredible people out there and mentors of mine. They start with a joint business plan, right? So it means your
Mhm.
customers is, and that's different than a joint development plan where it's a commercial arrangement for you to make something on behalf of the other company. It's how are we going to market together so we grow together, right? And you can have that conversation if you're invited to the table to have that conversation, you know you're working with somebody strategic. If
Yeah,
they're not organized to do it, they're likely transactional in their behavior.
yeah. I've seen both of that. I've seen where you've got sort of that upfront planning with the customer, and it's holistic in the form of this joint business plan. I've also seen situations where um, you have to go to customers who don't behave very well and maybe aren't aware of their behavior and say, look, our best relationships are ones where we can provide this kind of information and this kind of service, but it requires our customer on the other side has to provide this kind of information and this kind of service as well, right? And that yields us both something that's a win-win, whether it's with total inventory hold or lead times or something like that, right? Where you point out and specify the behavior that you want to see if the customer's willing to engage in that for a payoff.
It's another very interesting point here, which is um, some customers are also competitors in some spaces, so they're very guarded. But again, that commercial aspect and that leadership aspect is to help ring fence the places that need to be guarded, but not apply that one size fits all across everything. I've got customers in the chemical industry who literally are piped together, site to site, right next, and there's a fence in between, right? Yet the customer decides from a pricing perspective to truck product from the competitive supplier to take advantage of short-term price aspects and introduce variability in the draw from the pipe, causing all sorts of disruptions back and forth. It, is that truly the strategy that you both are collectively trying to grow together, or is that somebody that's operationally focused, making a buying decision that's in the interest of the purchase price, not in the interest of delivering on the whole, right?
Yeah.
So thinking
No,
through all of that together becomes very important. It requires leadership.
that's a great one. That's a great one. Before we get started again, I just want to mention that we are developing the rest of the 2025 schedule for the roundtable. As registered members, everybody who's on today is a registered member. You will get notices when new things come on the schedule. The best way to see what's coming up is to become a member. It's completely free, and for those folks who are going to listen to the replay, please think about becoming a membership. Um, let's get into capability building. So we've talked a little bit philosophically about our mindset around planning. You've mentioned some key themes like you must do cross-functional decision making, and the more cross-functional you can get. How do you think of then figuring out the capabilities that you have and figuring out the capabilities that you want to have and building those in for a system like this?
Yeah, I see that you flashed up earlier a slide on a survey, one of my favorite survey from years ago, where we asked about 100 different executives out there cross-functionally how to characterize or describe their business. My favorite part of this story was these statements of descriptions were purposeful, kind of reading from top to bottom as least mature to most mature, and least customer centric to most customer centric, focused on value creation and selected customers. And my first read on the results was, wow, 22% actually self-described that they're reacting to orders as best they can. And a Unilever executive that I worked with back then said he wasn't shocked, but more importantly, 78% of the industry is lying to you. That was pretty.
Meaning 100% are really operating reactively. Is that is that
Yeah,
what
that was the reaction from a very respected leader out there who knew
Yeah.
the industry and all the behaviors inside and out. Now, I'll give credit where people are claiming to be. They were investing in trying to build those capabilities to move into those maturity levels, and in some cases, we're demonstrating those in pockets, right?
Okay.
And that was the other. I just shared this story with you again from my same friend at Unilever. He said that somewhere in Unilever is a best practice, meaning that you can look inside a multi-billion-dollar behemoth like Unilever, and you can find good in different pockets. And true best practice is assembling the best of everything into the winning formula. And so essentially, you asked me how do I lay out this framework. So if you kind of translate this in, if you don't mind, Kendall, on the other view that
Yeah.
you had just.
Yeah. This one here.
Yeah. So essentially, um, we want to lay out a framework, and I've done this back to early days of my career. This was incredibly helpful for leadership to lay out their vision of the road ahead. And what I mean by that is the behavioral change that they expect, going from behaviors they don't like to behaviors that they expect in their future world that is growth oriented. And so it's a five-stage model, nothing very innovative about a five-stage model. But the bookends of this are a stage we want to leave behind, stage one, and a view, an aspirational view that's out there of someday when all stars aligned, I hope we get there, right? Because when we do, life's going to be beautiful. And in between are a set of steps that we'll take to move toward that viewpoint. And so on the left side of this grid are capabilities. And what do I mean by capabilities? It's your processes, it's your organization design, it's the way you leverage systems, it's your strategies. And those need to be in play and complement each other in the way you go to market with your commercial teams, the way you operate through distribution, manufacturing, supplier relationships, your financial capabilities, and that financial room to maneuver that I described earlier, and the way you leverage information technology along the way. So if you lay out, think of each one of these points, stage one, a description of what your go-to-market capabilities look like, to a stage five, the aspirational view and a description. Very simple words. As a leadership team, you get your organization to understand and envision that future, then they can paint themselves into that future and start developing the competencies and capabilities to get there along the way. So in that, oftentimes we look at this underperforming element where you're siloed, very fragmented, very reactionary, and we want
Yeah.
to move to something more proactive, first delivering those early wins of incremental, showcasing as we get even better with more customer-centric behaviors in a stage 3 that we jump to something of a step change. And often another theme is moving just beyond the customer to network-centric, meaning I'm connected end to end, not just through my customers, but all the way back through my suppliers and service providers around this, so that we're all working in harmony. And when we do that, if we can pull that off, that is when you start to see the case studies that say, hey, this company's market leading, right?
Yeah. What are some of the, just to give us some examples so that we can sort of pin it down concretely within each of those capability buckets? What are some of the things that you think of as sort of being core issues or systems or organizations within each of those capability buckets?
Okay. So in the go-to-market, I'll start with just go-to-market capabilities as an example, right? So in the first part, a lot of times how companies will describe this is they're extremely reactive to orders. They're not getting any kind of customer insights or forward visibility as a stage 1, and they're trying to get better intelligence coming out of their commercial facing teams to flow back
Mhm.
into the organization so they can organize around it. So that's often a behavior that's very reactive. The complement to that reaction in stage 1 from an operating model perspective, again, it's very order driven. So you receive an order, you try to fit it on the schedule. You often have schedules that are in arrears, meaning you're back ordered, you can't keep up with it, or you're
Yeah.
constrained. And why? Because you were surprised, right? Because it's reactionary. So a lot of times the technology in those stages is also very spreadsheet dependent. So people
Mhm.
trying to get better visibility off of a bunch of disparate spreadsheets. And quite frankly, an investment in ERP that's incredibly transactionally focused and
Yeah.
often based on the requirements of financial needs, financial end of month reporting, for example. So if your whole business approach is transacting as best you can, it's nice to have a transaction system. At that stage, you
Yeah.
don't have a kind of a planning system or a planning capability. You're expecting your people to brute force it through Excel. And that
You're just throwing your order book out on a table and saying, okay, let's get these orders in line, right?
exactly.
Okay.
So if you think then a little bit forward to internally focused, then I can start to leverage the information that I have. Again, I mentioned that earlier. I have better ways of collecting sales input into the process, right?
Mhm.
I have ways to evaluate call reports and other things to start to assess probabilities on whether an opportunity is going to materialize or not. I can look at the risk side of that as well, where not everything's going to be a win. There's going to be losses along the way. So how do I balance that perspective and have the capabilities to evaluate it? Based on that demand picture, I can create a signal that then I can operate around, right?
Yeah.
But at that point, I've got to be careful because a lot of companies in stage 2, when they start their planning journey, they start to think about organizing at aggregate levels of work centers or groups of products and things like that. But again, companies, individual customers don't order a work center. They don't order or an asset level. They don't order a group of products. They order an individual product at a specific point in time. So I've got to be able to plan at more granular levels so that journey starts to understand the precision at which you're looking at the details
Yeah.
in order to then deliver on and service those expectations, which you would then measure. So you put more measurements in place as well.
Yeah.
A lot of companies still are only prepared to ingest their own data. They're not prepared to ingest data like inventory levels at customers, consumption patterns from customers, and so or even have model structures that characterize their customers. So without that, you're leaning more on offline spreadsheets or some subjective opinions,
Yeah.
views like that. So the companies that do that well are investing in those as they move through this journey to the right, if you will.
What I was going to say is what's interesting about the way you describe that as you were describing is, I think of sort of a very early step too is do we even have customer forecasts? Sometimes they're at super high level, but you actually started talking through both qualitative and quantitative understanding of those forecasts, detailed forecast levels, and then enough of either a relationship and or an understanding of your customer's market to be able to start to say, well, is this forecast we were given realistic? What's baked into this? Is there some other pattern besides fundamental demand that's happening here? And can we tease that apart? And even starting to understand your customers' downstream demand patterns, if I get that right, right? Or you
That's
might
right.
think, oh, it's a move to getting forecasts from customers so that we can build a forecast ourselves and then demanding forecast accuracy for them. What you're really talking about is a holistic set of data inputs or signal inputs that that give you a much more aware picture of what's real in the data, so to speak.
Absolutely. Yeah. And even Kendall, I would say, as again, more mature on the spectrum here, but looking for the story surrounding the numbers, not just the numbers. So it's good to get data, right? But to
Yeah.
contextualize that data with, what's happening and why the customer is behaving the way they're behaving. Maybe it's because their competition is challenging them during a period of time that forces them to behave a certain way that puts you, because you service your customer, not the competitive customer threatening them. Without that lens, you can't see that context. So what I've seen as companies, they try to capture assumptions, which is great, but they're
Yeah.
trying to, again, drive more and more market contextualization around that demand picture, not just their own order book and order patterns.
Or they're straight for customer forecasts. You're now much more intelligent about sort of your customers' patterns, your customers' usage patterns, and then their demand patterns that they see.
Exactly.
Super fascinating. What is when you get to so when you get to this stage four piece, I'm fascinated as well by the continuum you have up across from siloed all the way to platforms and ecosystems. When you get to a stage four, what does that look like? Or even a stage five?
Yeah.
Are these just pie in the sky, that's our North Star, but we're never going to get there sort of things? Or what are the actual practices that you start seeing with leading companies in that kind of space?
Yeah, it's let me try to I'm going to use a personal experience around this to describe it.
Yeah.
You mentioned early on that I worked for VeriSign. So I worked in a part of VeriSign that managed the internet infrastructure, so the root servers on the internet that resolves every time you go to Amazon.com or whatever, it resolves that signal to make sure you actually land at Amazon.com to go buy your products, right? And so those are Amazon.com ending in .com, .net. When I started VeriSign, there were 23 million domains out there in the world that ended in .com, .net. When I left, 124 million domains, and I haven't looked at the latest industry brief, but it's much greater than that. So our viewpoint and what we did and our leadership commissioned, we had Jim Collins, good great, come in,
Mhm.
and we wrote 100-year manifesto. And a lot of us reacted and we're thinking, 100-year manifesto, most of us are going to be dead by then. Why do we care? Well, the mindset was because we want to leave a legacy, right? We want to
Yeah.
build information infrastructure, intelligent infrastructure that's indispensable to society. What does that mean? Indispensable means people can't live without it, right? So our reference points were like in the old days, it was the telegraph, it was the railroad. These were reference models that you could think about. Is it achievable? At one point, somebody thought you could never build a rail network. You could never build a telegraph and create communication like that. Well, now
Mhm.
look at what we're doing with the world of networked technology, if you will. Most of what you'll find out there in that indispensability comes when you are a platform. You're not just a
Yeah.
company selling a product. You're a platform that people are building around. And reference points might be like Apple and the Apple Store. So they've got the infrastructure of the phone, but they have the Apple Store and apps that you buy services around it. So, and a lot of us can't live without our iPhone, right? It's our digital ego. Yeah. So here we are. Those are more technology examples, but I've seen companies, and I was part of this with McCormick. We had created a capability inside of McCormick called Flavor Print, using the food science within Flavor Print to help profile the flavor experience of why you choose to make or eat what you choose to make or eat every day, right?
Mhm.
We could then turn that into a recommendation capability that would suggest to you what you would prefer. Now I'm not McCormick, the spice company selling A to Z spices on a shelf. I'm McCormick, the brand, as a service that
Right.
companies are connected to get the food science expertise, right?
Yeah.
So any company can do this. You don't have to be a VeriSign or an Apple or Google or any of those guys. You can do it even as a chemical company. You just have to have the visionary capability to lay it out there.
Yeah. I can think of lots of examples where you're adding services intangible intellectual property benefits, right, along with your supply. And all those require you to know your customer that much better, to understand their situation and incorporate that back into either how you deliver the product or how you deliver something as alongside of the product.
Yeah,
Um,
absolutely. And Ken, I'll give you one more example more relevant to the industry. So I did a lot of work in agricultural industry, agricultural chemicals as well. Um, Challenge with agricultural chemicals is, you know, your product needs to arrive when the need is there, right? When the
mhm.
bugs arrive or before the bugs arrive or when you're trying to grow. And those are weather driven, seasonal, high seasonality, right? You
Yeah,
can't you can't push that pig through that snake that quickly, right? So
right,
can't pre-position you can't build warehouses everywhere that you need it. So how do I virtually assemble storage locations that and logistical capabilities to get my product into market at the right
right.
time? That's a virtual approach versus a physical approach to investment that in one of my customers, I would credit them to be extremely clever in the way they virtualize their network. That would be more stage 4, stage 5.
Gotcha. Okay. Okay. How would I think about so one of the things I think I hear here is you can think about systematically designing where you're at, figuring out where you're at and where you want to go in terms of capabilities down to the sort of the individual capability level. I know I've often seen system-led implementations where, we're gonna implement SAP HANA, right? And that's what's driving the transformation. It seems like you're thinking about doing something a little more holistic. So as you think about sort of actually planning and actioning a transformation, what are the critical success factors there?
Yeah, absolutely. So I would describe that kind of systems driven approach. Systems need to be a close follow. You need to have your strategy process and organizational capability lined out
Hmm.
and organizational readiness. And what do I mean by that? These are complex processes. These are complex systems. For the most successful ones that I've seen, they take their best people offline for a period of time to get the experience baked into the way the system thinks about the business, right? That means you have to have bench strength where you can have
Yeah.
somebody backfill those experts while they go configure your future. And a lot of times it's too lean in the approach where they try to have you do two jobs at once, right? And and in that you can't serve both masters. So what happens is you sacrifice a little bit of each, and then the technology teams can take over where they just start implementing the status quo, the off the shelf, right?
Yep.
Without
Yep.
thinking about that connection to the business. The challenge I've found, even with the kind of bench strength comment that I have, is you have to believe that you're investing in these systems and the growth agenda that we've started off with here is that when you come out of the other side of that, you're going to have more scale in your business, that there's
Mhm.
going to be plenty of opportunities for those leaders that now have not only the business experience, but just built the digital capability around it to go back and be your next leaders to take it to the next level beyond that,
Yeah.
right? And so if you can lay that viewpoint out, you can get your talent organized around feeding that future and still develop new people, that are fighting the battle every day that become the complement on the other side.
Yeah.
So that I think is a very important distinction versus just a technology driven approach.
And what I heard you say, I think, is if you shortchange the plan and the resourcing, even if you didn't intend a tech-led implementation, that's essentially what you'll end up getting, right? Because
Yeah.
because you're spread too thin and the IT department's going to continue to implement the system no matter what. And we'll figure that out later, or we'll figure it out when it's up and running, become the mantra. Is that how you've seen it happen?
I have just to put some real language across many companies. I've sort of in my career now, the language has evolved, but one language that I still don't understand is when something gets labeled a soft go live. Okay, like you're either live or you're not, right? The business is either using the investment or they're not. So soft and how long soft lasts is it's a label on something I quite frankly can't understand. So like you're saying, if you're not careful, you start to create these arbitrary achievements and
Yeah.
or arbitrary deadlines, and you end up with there's so much work that I've done a lot of greenfield opportunities around putting systems in from the start, which is awesome. Not without mistake. These are complex systems, right?
Yeah.
But also have plenty of experience around brownfield. So what is brownfield? It means somebody else did it wrong, right?
Yeah.
And
And you're
some of
coming
them
in to fix it.
are pretty brown, right? Again, they're complex. So I don't want to shortchange the complexity, but you can see the mistakes along the way
Yeah.
quickly when it becomes imbalanced and not business driven.
I totally resonate with your soft go live. We have the same phenomena when you talk about innovation and new product introduction. If I hear a commercial team say, "Oh, we're doing a soft launch," like that's red flag territory, right? What you
Yep.
know is either something's not been done well, the customer they don't understand the market, but soft anything means uncommitted or unprepared, but still moving forward, right?
Yep.
Yeah,
Understood. Yeah. Same thing, Kendall, on trials. I can't tell you how often, and some of my friends that are out there know who I'm talking about. But
yeah,
you say trial. I want to know: are we talking about an R&D trial? Are we talking about a manufacturing capability trial? We're just seeing if you can make it to scale. Or are you talking
yeah,
about a commercial trial where you're putting your product in your customers' operations to get first experience and feedback to then scale it up to market level,
yeah,
right?
yeah,
What trial are we talking about? So
yeah.
it's a common theme across many capability conversations.
There's a go slow to go fast theme here too, in what I'm hearing, right? Do the design work, do the upfront planning, and you'll go faster off the back end. You just
Yep.
anything else is sort of wishful thinking.
One more comment for you there. Think of it. It's been true of like Ford Motor Company. A common discussion. 90% of the cost is in the design is baked in during design, right? So
Yeah,
if you don't think of design for supplying it or design for DFX as they called it for everything, then you can build in too much design by not thinking through it up front enough, and a cost in the design. So again, that end-to-end mindset even
yeah.
carries through to innovation.
I love it. I love the theme. Paul, I want to thank you for spending the hour with us. It's been a great conversation. And for everybody on the phone, please check your email for notice of the next events. We'll have a schedule. We're building it out now, and we've got a couple of interesting guests in the green room, so to speak. So we'll let you know when those sessions are ready to go. So, Paul, thank you. And with
Thank you,
that,
Kendall.
I will wrap today's session.
Okay. All right. Thanks,
Thank you,
everybody.
folks.